This, of course, is the second spate of attacks in at least 2 months. Does this mean that the market reaction will be more sustained?
I think that the market is really having this cushion from the rise in inventories in the U.S. So it's interesting. Oil prices fell 4% yesterday on a bearish inventory report, and we're up only 2% today on a significant escalation of tensions in the Middle East. So that tells you that the market is interpreting the supply picture as having a very significant buffer, both from high inventories in the U.S. and the fact that OPEC has significant spare capacity so that the market can absorb any supply shocks.
Let's talk a little bit about the region, because the previous attacks were around Fujairah, and now we're seeing these attacks really around the Strait of Hormuz. Does this mean that the regional impact could be bigger just because of the shipping lanes and how they could affect the movement of tankers now?
Yeah, so I don't think that there's a concern that the Strait of Hormuz would actually close, certainly not for any sustained period of time. We've got the Fifth Fleet there, so that would probably be a deterrent. But it really is a concern about it being a tripwire in the sense that the U.S. could escalate in terms of how they respond to Iran, and then Iran there could be potentially more attacks. And so that could risk having more attacks throughout the summer, and that raises the level of tensions. But I don't think that there's until the market sees a sustained impact to supplies or pipelines, I don't think that the market's going to ascribe full geopolitical risk to the price of oil.
Yeah, you mentioned the Fifth Fleet, of course, being in the area. What do you think the chances are, if this sort of thing carries on, that we'll return to the days of these escorted tankers through the Gulf, as we saw in the 1980s during the Iran-Iraq War? And does that raise the risk of misunderstandings and potentially conflict?
I certainly think that there are going to be more of these types of attacks, and every time there's an attack that raises the risk profile in the region. But there is an underlying assumption in the oil market right now, similar to how there's been an underlying assumption in the equity markets that both Trump and Xi want a trade deal. So even if there are tariffs, ultimately the two will come together over time to come up with a deal. And I think the underlying assumption in the oil market is that the U.S. administration doesn't really want to get fully entangled in a Middle East conflict, and Iran also doesn't want to take on the U.S. military because that's not a conflict that they would win. So I think that the underlying assumption is that there might be more of these attacks, but they're not really going to have a sustained impact in terms of actual supplies, and therefore not really so much on price.
In terms of OPEC, does this sort of raise the pressure for the body to just get on with it and set a date for the next meeting? And will that meeting have a rather uncomfortable political dimension to it now?
It does have an uncomfortable political dimension because they do have to reach unanimous agreement on the date. And so far, Iran has not agreed to postpone the date to July. I think that Saudi wants to postpone the date to July to have greater clarity on the G20. Of course, if Trump and Xi come together at G20 and that changes the outlook for having a trade deal, that could dramatically alter the demand equation, and that would significantly impact OPEC's calculus in terms of cutting supplies or not. So I think that ultimately they will go ahead and postpone the deal. But you're right, there's still uncertainty about when that meeting is actually going to happen.
The U.S. has been threatening to sanction even Instex over the Iran deals. The Instex, of course, would help keep trade open between Europe and Iran. Are we expecting these sanctions to take place, and what would happen to the Iran nuclear deal then?
Well, that is, of course, a big risk of Iran potentially pulling out of the Nuclear Non-Proliferation Treaty. We know that they have already expanded their uranium enrichment. Some people say that it potentially is already in breach of the JCPOA. The sanctions up until now have been even more effective than anyone anticipated because we already had recent experiences with companies complying with the sanctions. So the level of time that it took to get compliant wasn't all that difficult. So I think that even if the sanctions continue, we are likely to continue to see Iranian exports go down quite dramatically.